Real-time news on the hour, every hour.
Welcome back to CryptoBanter.com. And of course, if you did watch our show yesterday, you'll know that we think the biggest news that's ever happened to crypto happened yesterday. And that, of course, that the US banking regulator said that banks can settle using public blockchains and using USDC stablecoins. Today, we're going to take a look at what this legislation means, what the implications are for the banking system, and what the implications are for the public blockchains. Who will be the big blockchain winners and who will be the big blockchain users? We're going to take a deeper look into that today, and you're going to hear my analysis for what I think. We're also going to be talking to Fluffy Pony, who's the lead developer of Monero, about what the legislation means for privacy coins. Then, of course, we're going to be doing our altcoin picks. Every day we do some altcoin picks, and so far, so good. But that's probably because it's a bull market and everyone's calling it right. So this is a show that you don't want to miss. In fact, this is probably going to be one of our biggest shows, so don't miss this show, guys. And if you are watching it on YouTube, hit the like button, hit the subscribe button now, because that is how you spread the love, spread your brags, and spread the crypto content to other crypto enthusiasts around the world. I'm Crypto Man Run. You're watching CryptoBanter.com, and we have got a huge show for you today. Stay tuned after the break.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Yeah, that's CryptoBanter.com, and this is a place where you talk crypto. Remember that this is a call-in show, and of course, if you do want to call in, all you have to do is go to our website, which is www.cryptobanter.com, and hit the call-in button, and you'll go right into the studio, and you'll be here live with us. And of course, you can remain anonymous. Now, today we have a huge show for you, because yesterday the biggest news that ever happened to blockchain dropped on the news waves, and that is, of course, that the U.S. banking regulator. The biggest banking regulator in the US said that banks can now settle using public blockchains and USDC stablecoins or USD stablecoins. This is huge news, and today we're going to be looking at who the biggest winners are, who the biggest losers are, and I need to cough because my throat is... All right, welcome back. So today we're going to be looking at who the biggest winners are and who the biggest losers are and why. And in order to really understand the implications of this legislation, you really have to understand how the banking system works today. And today, the banking system clears using a settlement layer called SWIFT. SWIFT is a settlement layer that was created in 1978 and effectively allows banks to send messages to one another. Yep, exactly that, just messages. So how banks transfer money today is effectively, if you want to send money to me, your bank would send a message to my bank that you want to send me money. And if the banks trust each other, the money automatically clears. But if the banks don't know each other or don't trust each other, they need to get what's known as an intermediary bank that they both trust to stand in between the transaction. Now, this system has been used since 1978. It's slow, it's expensive, and it's inefficient. But most of all, the problem with the system is that they're just sending messages. They're not actually sending money. They're sending messages across to each other. And they believe that one day they will clear these messages or clear these ledgers that these messages create. And that's, of course, why this new legislation is so big, because this new legislation says that banks can use public blockchains. Yeah, public blockchains, the same blockchains that you and I have been investing in, to clear transactions, and they can use US dollar stablecoins. What does that actually mean for the industry? Well, for the banking industry, the implications are huge. First of all, for the first time in history, banks are going to clear by actually sending assets to one another. Remember what I said? I said SWIFT was actually sending messages to one another and clearing at a later stage. Now banks can actually send actual value to one another by sending blockchain tokens or sending blockchain assets, just like we send US dollar Tether, Bitcoin, Ethereum, or any other token to one another. So the implications for this are huge. It means that the banking system is going to clear immediately, which means that banks are going to be more solvent. They're going to be more efficient. They're going to be quicker, and the transactions are going to be cheaper. And it also means that there's going to be no more space for these intermediaries. But who are going to be the big blockchain winners in this game? if we want to understand who the big blockchain winners are going to be in this game, what we have to understand is what banks are going to be looking for when looking for a blockchain provider. And that's effectively what I want to do with you guys right here today. So if you are watching us on YouTube, hit the like button, hit the subscribe button. Let's get into the content. Let's talk about what the banks are going to be choosing, which banks are going to use this, what blockchains they're going to use, and what blockchains we should be buying, what tokens we should be buying. So let's look at what the banks are actually going to be looking for in selecting a blockchain provider. My sense is that the banks are going to be looking for primarily high throughput, high TPS, lots of transactions, and a very decentralized blockchain. And I think that the banks are also going to be looking for smart contract capabilities, because this will give them the ability not only to send funds, but also to work with the derivatives protocols that they're used to working today. So the winning blockchain will be decentralized, have a high throughput, have low fees, and of course have smart contract capabilities. So I guess Ethereum, which is kind of congested at the moment, and if you have been using it, you know about the high gas fees, probably doesn't meet all these criteria. And so I don't think that Ethereum will be the biggest winner here. And if Ethereum is not going to be the biggest winner here, then we've got to ask ourselves, well, who is going to be the biggest winner here? And I've got a thesis about who I think the winners will be. And we're going to compare my thesis to what the market is telling us about these winners. Here is a list of my winners. As you can see, the first winner that I've got is, of course, Stellar. I've got Cardano. I've got Algorand. I've got Polkadot. And I've got, of course, Elrond. And I'm going to be telling you why I think each and every one of these guys may be the winners. And if these guys are the winners, then let's look at who the losers may be. So I'd love to hear your thoughts. I mean, if you are watching this and you think that these are the winners, let me know what you think. Let me know if these are good winners. And I'm going to tell you why I think these are the big winners of this legislation. So let's look at the first pick that I have for a winner. And of course, the first pick I have for a winner is Stellar Lumens. There's a reason why I choose Stellar Lumens. We've been calling the XLM token, or the Stellar token, on our show since about 13 cents. And today, when I last looked, the Stellar token was trading at about 34 cents. And that gives it a market cap of about $10 billion. Now, why do I think that Stellar is going to be the big winner of this race? Stellar is not a smart contract blockchain. In fact, it doesn't do anything but very, very basic smart contracts. But that's because Stellar was built exactly for this purpose. It was built to be an interbank settlement layer. And if you remember, the same people, or the same guy that built XRP, a guy called Jed McCaleb, built the Stellar protocol, and he built it specifically for this. He built it so that banks could do high throughput, fast transactions between one another and clear one another. The Stellar token is actually run today by the Stellar Foundation. So unlike XRP, it's not run by a private company. And the Stellar Foundation has been in talks and signed memorandums of agreement with both the German central bank and the Ukrainian government. And that was, of course, announced yesterday. We announced that on our show. So these guys have got a head start. They've also been talking to countries in Latin America. These guys have got a head start. These guys have been doing a lot of work on the blockchain and on central bank clearance. And if you look at the price of Stellar today, I'm going to call up the price as I last saw it. I'm sure you guys saw it too, but I don't have the big price here. But if you do call up the price, you'll see that the price of Stellar has gone today to about 34 or 35 cents. And that for me means that Stellar is trading at a $10 billion market cap. And a $10 billion market cap, I think that if they are the front runner for this, then I think that this is an absolute steal. Let's look at the second one of the big winners that I think today might win. If the banks start using public blockchains like the legislation said. And of course, the second winner for me is none other than Polkadot. Yeah, Polkadot for me is the second one here. And there's a good reason why I like Polkadot here. Polkadot is a chain that is built for high throughput transactions and specialized transaction throughput using side chains. Still, Polkadot is tackling the scalability and interoperability challenge. Now, the banks may be looking for interoperability across chains. And, you know, the best interoperability protocol out there today is, of course, Polkadot. Today, Polkadot is trading at a market capitalization of also about 8 to 10 billion. Last I looked, it was about 8 billion. But we are in alt season and coins are absolutely flying. So I'm not sure what the current market cap is. But at an $8 billion market cap, I think that this is cheap. In fact, I think that Polkadot may catch up to Ethereum's market cap in the next 2 to 3 years. And I also think that Ethereum's market cap will go closer to $500 million and maybe even $1 billion if they get all their scaling challenges right. So you ask me right now, buying Polkadot, if you think that the banks are going to use it as an interbank settlement layer, And it is something that we can imagine. That is because, of course, they've got specialized processing using those side chains. I think that Stellar Lumens is in number 1 position, but Polkadot is, of course, in number 2. And I've called up the top 5 coins that I've predicted right here, and I've called up the price, and you'll see that the market is telling you that they agree. Cardano, Polkadot, Elrond, Stellar, and Algorand are all up. All right, let's move on to my next pick for the blockchain that may benefit most from the new USOCC legislation that allows banks to settle using public blockchains and US dollar tether transactions or US dollar stablecoin transactions. And for me, the next coin that will benefit from this is, of course, Cardano. Now, lots of you have been following our show, and you'll know that we've interviewed Charles Hoskinson, the founder of Cardano, on our show. And he is a big fan of the show, and we are big fans of him. They've really, at Cardano, taken the slow and steady approach. They've done a hell of a lot of research, and they've built an amazing stable blockchain, a proof-of-stake blockchain that is highly decentralized and has a lot of transaction throughput. In the next couple of weeks, they should be launching smart contracts. And of course, when they do launch smart contracts, that will attract the developer infrastructure building on this protocol. So unlike Ethereum or even Stellar or Polkadot, Cardano doesn't have a big developer ecosystem building on it. And that's, of course, because the chain hasn't supported smart contracts. And the smart developers have been going where the smart contracts are. If we look at Polkadot, Polkadot has already attracted a huge ecosystem of developers. And, of course, that attracts the VC money. Cardano hasn't done that yet. And I think it's primarily because they haven't got smart contract capabilities on the blockchain. So if I don't know if when they do get smart contract capabilities on the blockchain, and that should happen in the next week or 2, then we can probably expect that Cardano will keep running just like it has been running. And if you have been watching this coin has, of course, almost doubled or over doubled in the last couple of days with the rest of the altcoin season. So I think that if you are a believer that Cardano is going to be one of the US banking system and maybe even the international banking systems settlement layers, then at an $8 billion market cap valuation, Cardano may be quite cheap. Now, let's talk about the US banks and then international banks. Of course, this is a US law that has passed, and most people are saying that this will only affect the US, but that's not the case because we know that once the US implements it, all the other countries around the world will start following suit because it's going to be international settlement, not only bank settlement. And so there are other blockchains that may be in the front running. But there is another blockchain that was founded by an American team that may be one of the front runners here. And for me, that blockchain, of course, may be Algorand. If you know the story behind Algorand, Algorand was developed by Silvio Micali, and he's an MIT professor. He's a great guy, an MIT professor, and he created a high throughput, highly decentralized blockchain. And they've also been doing a research, slow and steady approach, lots of papers written, lots of review, but they are making some kind of progress. And I think the fact that even though they're not an American blockchain or that their foundation has been moved out of the USA, I do think that they may be one of the front runners because they have some roots in America and some of their research in the USA. The downside of Algorand, they have 2 downsides. One is that they've only just introduced smart contract capabilities, and their smart contract capabilities aren't fully developed yet. They're still developing the smart contract capabilities. The other thing is that they don't have a big burgeoning ecosystem like the Cardanos, like the Algorand, like the Polkadots, and certainly nowhere near the Stellar or the Ethereums of the world. So I don't know if the banks are going to be looking for a big developer ecosystem or if they're going to build it themselves. But I think that Algorand is one of the tokens that may stand a chance here. And then, of course, I have one more big winner, and this one more big winner may actually shock you guys. Or, in fact, if you've been watching our show, it's not going to shock you guys so much because the next big winner for me is the blockchain that has no ties to the United States, and that is a blockchain developed in Romania, and that is, of course, Elrond with the EGLD tokens. Now, if you have been watching the show, you'll know that it's a very, very, very high throughput blockchain. It's a decentralized blockchain. They're talking about 16,000 transactions per second. But the reason why I don't think that these are the front runners for the American banks is because this legislation was passed now, and this protocol is a little bit behind in its race for development. It's not as well developed. The interfaces are not as well developed as Polkadot, Ethereum, Cardano, or Stellar. But from a performance point of view, if you look at Elrond's performance over the last couple of days. They hit a market cap of $500 million just 3 or 4 days ago. And already today they are on $600 million. So Elrond is a good bet. If you're taking a bet on blockchains with high transaction throughput, Elrond may be a good bet. And whereas we didn't see much action from the blockchains other than Elrond this year, we saw Cardano pretty stable. We saw Algorand pretty stable. This has changed the game. This has been the biggest news for these blockchains that we've ever seen. And of course, if there are winners, there are going to be losers as well. Let's take a look at who I think the losers will be in the race. And when I say losers, just losers in this race, and that is that I don't think that these are the front runners for the US banking system to build on. And I don't know if any of the banks are going to build on any of these. And for me, the losers, surprisingly, start off with Ethereum. I think that Ethereum is congested. I think it has high gas fees. And I think that the banks are going to be looking for something that is not as congested, has higher transaction throughput, and lower fees. And I think that Ethereum has put itself out of the running there. I think Ethereum has become a darling child for the DeFi protocols, and I think it'll win the DeFi race. I think it may come second when it comes to the centralized finance race, and I think it may lose that to either Polkadot or one of the other chains that we've spoken about today. So I do think I am very bullish on Ethereum. As I've said to you guys before, I think Ethereum will hit a $500 million market cap and a $500 billion market cap and maybe even a $1 trillion market cap. But I think in this race, I think Ethereum wins DeFi, and the CeFi race probably goes to someone else. I think the Ethereum developer culture is very much a DeFi culture, and I think that the banks will use, if they are going to use public blockchains, are going to use a very different public blockchain. Who else are going to be the losers? Well, for me, of course, TRON and EOS, and I put those two in the same cluster because they're not really decentralized. TRON and EOS have a delegated proof of stake, and they have these validators, and they have a hand-picked bunch of validators, so to speak. They're not as decentralized as other blockchains. And I don't think that the banking system, if they are going to go onto decentralized blockchains, are going to go onto decentralized blockchains that are not really decentralized. And so I think that TRON and EOS don't gain much out of this. And I think, of course, the biggest loser out of all of this, and that's because they could have won this race, is, of course, Ripple. I think Ripple could have won the race for the interbank settlement if they had just played their cards right. But instead of playing their cards right, I think they took the other approach. They were very centralized. There was a centralized company selling tokens, and the centralized company had other shareholders, and they were using the funds raised from selling the tokens to people like you and I. Well, I don't really buy XRP, but to other investors. They've been selling these tokens to other investors to fund the operations of the centralized company. And to me, that was never a good business plan. I think I was quite vocal about that. And I think today the proof's in the pudding. I think they're the biggest losers. You've seen the price performance of XRP. And I don't think that they're in the race or stand to benefit at all from this USOCC or the US banking regulators' decision to allow companies or banks to settle using a private blockchain layer. So yeah, those are my calls. Those are my calls for the 5 winners and the 3 or 4 losers, depending on which way you look at it, for the because of this regulation. So the winners, again, let's just go over them again. For me, the biggest winner, because it is already purpose built for this and already in discussions, is of course Stellar Lumens, then of course Polkadot, then Cardano, then Algorand, then Elrond. The biggest loser by far, as you know, is XRP. Then of course TRON, EOS, and I think that Ethereum is a big winner, but I don't think that Ethereum wins the bank-to-bank settlement layer. I think that they've got their eyes set on something else. And yeah, that's it. So that's my thesis for that. And we're going to be moving on to the next part of the show in just a second. We're going to be bringing Fluffy Pony onto our show. Fluffy Pony is the lead developer of Monero, and we're going to be talking to him about privacy coins and what the regulations mean for privacy coins. So if you are watching us on YouTube, hit the like button and hit the subscribe button. We'll be back just after the break.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Yeah, you're watching CryptoBanter.com. Give us some love. Hit the like button, hit the subscribe button. We've got an amazing segment here for you right now, and that is we are talking privacy coins, and we're talking privacy coins with none other than Fluffy Pony himself. Fluffy, welcome to CryptoBanter.com.
Hello, how's it going?
Good, how are you?
Yeah, not too bad.
Fluffy, you've been
It's been a minute.
It's been a minute. You've been kind of locked up. We haven't seen you for a while.
I know. That's what COVID does, eh? It stops you from traveling the world, and you end up doing a bunch of things on Zoom.
Yeah. Fluffy, no doubt you've been watching what's going on. I think you may have heard our last segment. What do you think of this USOCC regulation that banks can now settle using blockchain? Do you think it's as big as we're making it out, or as big as I'm making it out?
You know, no, I think it is a pretty big deal. I think like somebody, I remember having a discussion with someone years ago with a no coiner, and they were like, "Oh, Bitcoin's not real money," and I was like, "Why?" And they're like, "No, because I can't pay my taxes with it." And I think that this changes things, because this is really a step in that direction. You know, like banks use if banks are able to use public blockchains and stable coins, then it's like stepping towards that acceptance of it as a currency, because I think there's largely been it's been in this weird middle ground, right? It's been Bitcoin, the asset, you know, it's like gold, it's like property. How do you handle it? Oh, we don't know, you know, but tax treatment is weird. But ultimately you want it to be a currency. You want certainly not everything. I mean, Ripple's a security, but you want some tokens like Bitcoin and Monero to be viewed as currency. Yeah, I'm gonna get some hate on Twitter for that. But at the end of the day, like that's ideal. That's where we want it to be. That's the treatment that we want from regulators. It is a currency. It's like cash. That's what you want.
Yeah, look, I think certainly what they said yesterday, and they said that US dollar stablecoins, and US dollar stablecoins, I think that's where they're going to be starting. They're going to be starting this on a US dollar stablecoin level, and then we can probably expect for it to go up.
Yeah.
Fluffy, are you pro more regulation, or are you against more regulation? Let me frame the question for you. I know that as an early blockchain OG, someone who's been around for a while, this movement was started to break away from, you know, the legislators and the powers that they have.
Yeah.
But the more legislation we get, the more money is flowing into it, and the more the prices are going up. So you kind of like, you know, more legislation says, you know, more legislation, but more money. Less legislation says, you know, more freedom, but less money in the ecosystem. Where are you on that pendulum?
So I guess where I land is I can't control or influence regulators. I'm grateful that at this point regulators are not looking to ban cryptocurrencies globally, and that's kind of all you can hope for. I would hate to end up with a world where it's the opposite end of the spectrum, where it's something that's viewed as being so anti-regulation that only a handful of people use it, and you know your friends and family are like, oh, like they're treated like you've got a drug habit because you use Bitcoin. Like that's certainly not a situation that I want to be in. I also am not a big fan of regulators over-regulating, but I think that, and maybe this is controversial, I don't know. I think that the more we encourage and to learn about it, the better it'll be, because it's not something that's inherently bad, right? I mean, you could argue that maybe something like drugs, recreational drugs, you might argue that, oh well, they're inherently bad because of the following reasons. Some of them, some are certainly not as bad as others. I think it's really hard to argue that a currency or a token is inherently bad. It's just a tool that can be used for good or bad, like a car or a kitchen knife or a gun.
I think what we're saying is, if you're gonna go mainstream, you're gonna need to have regulation and legislation. It looks like as this asset class is going, we're getting more and more regulation, more and more legislation. The same exchanges that were taking transfers, deposits and everything else many years ago now won't let you move unless you got a KYC and everything else. So I think this industry is becoming more mature, and I think that that's bringing more money into the industry. But it's at the expense of this freedom and libertarian movement that we created a while back, and I think that it's going to find its middle ground. Now, where there becomes a gray area is, of course, the privacy coins, and you've seen that a lot of these exchanges have taken a stance of saying, look, Coinbase about to list, Bittrex staying within the law, and saying, look, we're not going to have privacy coins on our platform because, the new legislation says that we can be held liable for what you do with your money if you're using a privacy coin. And we saw the privacy coins reacting pretty harshly to this. In fact, if you'll give me a second, I'm actually going to call up some of the privacy coins onto our screen just to give our viewers and our listeners an idea of how these guys have performed. They haven't performed that badly. If you look at them, I'm looking at Zcash on a 60-day, I'm looking at Dash on a 60-day, and I'm looking at Monero on a 30-day. They haven't performed that badly, but we are in a raging bull market. And in a raging bull market, these are the coins that would typically run. And now we're seeing them not running. So I think my question to you is, do you think that there's actually still a future for these privacy coins, or do you think that the regulator is actually going to put a bullet in them?
Yeah, that's a good question. I mean, I think the regulators trying to put a bullet in them is like the regulators trying to stop maths or gravity. It's going to exist. It's not, you can't stop it from existing. And I think that it's an embarrassment when some countries or some regulators call for heavy-handed regulation, because by contrast, you've got other countries with smarter regulators. The European Union, parts of the European Union are a great example of this, where they understand that the technology like this is going to exist. It's certainly not all regulators are treating it with the same way. I mean, you've got Australia that wants to legitimately put backdoors in encryption, and that's an embarrassment to the entire world of cryptography and to, maths in general.
Yeah, I mean, but as a regulator, what's the upside for allowing privacy coins? I mean, effectively, if you think about what a privacy coin is, and I know that there are many arguments to it, but it's to conceal the identity and to conceal the transacting parties and to conceal the amount of the transaction. Now, yes, of course, that's done with drugs and bounties and stuff like that, but it is also done in commerce where two companies don't want to reveal who they're dealing with and how much money they're dealing with. As a regulator, how do you balance that?
Sure. So it's a great question. So the way I view it is there are lots of businesses that are cash-based, and a lot of them comply with regulations just fine. People walk in, they pay with cash. And I'm not even talking about like weird businesses. I mean, like corner cafes and things like that might take in the majority of their revenue as cash. And they understand how to deal with this. Regulators understand how to deal with this. They know how to deal with owners of cash-based businesses. They understand where the limits are and where they're able to enforce regulation. So in the US, for example, they have something called an SAR, which is a suspicious activity report. And if you have someone walk into your car dealership and say, I want to buy that car for $12,000, I have a bag of cash, they might actually accept your bag of cash, but they'll have to file an SAR, a suspicious activity report, because of the amount of cash you're transacting with. But if you walk into a shop and you say, I'd like to buy a coffee and a donut for $20, and you give them a $20 note, they're not going to go like, oh, sure, better file a suspicious activity report. So I think that is a live example, a great example of how regulators can treat privacy-enhancing cryptocurrencies and privacy-enhancing systems like Lightning, which are Bitcoin but have added privacy, because they're able to then say, oh, hey, you're paying for your $20 meal or beer or whatever it is, no problem. But, oh, you're buying a car with Monero, well, we might actually need to file a piece of paperwork with the regulator.
Fluffy, I wish you could. I don't know if you are watching the chat, but the chat has gone absolutely crazy. You're getting big hugs from Portugal. You've got a whole lot of your fans coming in here. They love you here. They really do. Wow, I've never seen the chat going on like this. Fluffy, so what happens when the exchanges delist this? And it looks like it's a movement where the exchanges are delisting the privacy coins. And that's putting a lot of holders under a lot of pressure. And they're saying, hold on, where am I going to trade this? Specifically, if I'm in the US, my options are becoming less and less. Where do we trade this? How do we, if we want to keep holding Monero, where do we hold it?
Sure. Kraken's a great example of an exchange that understands and has a great relationship with regulators. Kraken, in fact, has a banking license. So, if you want to talk regulated exchange, Kraken is about as regulated as you can get. I would argue that the only exchange that's maybe more regulated than Kraken is INX. So, given that, it's pretty clear that Kraken's continued listing of Monero is it's really a thumbs up. It's like, hello, we can deal with Monero. We have no problem with it. It complies with the existing AML and KYC regulation, and you can trade on Kraken. And if other US-based exchanges are too afraid to stand up to what I think is not bullying from regulators, but maybe bullying from their banks, if they're too afraid to educate their banks or threaten to switch, well, then we should take our money to Kraken.
I think we need to look at it. We need to balance it for exchanges. I mean, let's take an example of a Coinbase, which is about to do a listing, or talking about doing an IPO. And the last thing that they want is, because of the trading volume that they get on Zcash or Monero, could get on Zcash or Monero, to turn around and say, okay, well, willing to jeopardize our public face. I suspect from the rumors that I've heard that Kraken is actually going the same way, and that Kraken is also going to IPO probably in 2 or 3 years. In fact, I've seen some evidence to that. Do you think that if that happens, that they would take a chance and go onto the market with a Monero or a Zcash listed?
I don't see why not. I mean, Gemini allows you to make Zcash Z-address withdrawals and deposits, or I think just withdrawals. And they're regulated by the NYDFS, which is arguably the most backwards financial regulator on the planet. Just look at the BIT license for evidence of that. So, I mean, if the NYDFS can deal with Zcash Z-address withdrawals, I don't think we need to worry about regulators being anti-privacy coins in the US. I think that's a myth.
All right, so would you be buying Monero now? I mean, I know that you are the lead developer, and I know you've been there for a while. And I'm not asking for me, because I'm asking you because it's here in the chat. People are saying, is this here we go. It's coming from Marcel Small, and Marcel says, do you think that this is a good time to buy XLM?
Yeah, well, that's XLM, not XMR. So.
Okay.
Different ticker.
Different ticker.
Dodged the bullet there.
Yeah, I know. If you want to know about XLM there, you should look at the previous segment that I did, and that'll do it. All right, Fluffy, I know that this is something that you love talking about. Is it too late to buy Bitcoin? Is it like everybody keeps asking me, is it too late to buy Bitcoin? I'm looking at the price now. I'm looking at the green candles, and, this thing's gone parabolic. Bitcoin is acting like an altcoin for all intents and purposes. What do you think? What do you think should we be doing Bitcoin?
So I think it depends on what your aim is. If your aim is to be a day trader, then day traders, I don't know what day traders do. They look at charts and they draw little squiggly lines, and they use terms like head and shoulders and dead cat bounces. Thank goodness the dogs aren't in trouble. And if you're a day trader, you're probably not buying Bitcoin. I don't know. But I think that if your aim is to store some value in cryptocurrency, you should be buying you should be taking a large portion of your money and putting it in Bitcoin. So the rule of thumb that I've always said to people is, if you are entering cryptocurrency and you don't know what you're doing, which is like 99.9% of people, you should be buying 70% Bitcoin. 30%, you've got money to play with. You can buy all host of mid, low cap coins, high cap. You can do whatever you want. Just take 70% and buy Bitcoin, because if everything else tanks, you will be grateful you did.
I say usually 60% Bitcoin, 30% Ethereum, and 10% Polkadot. And we'll talk about that in a sec. But I want to give you my view on Bitcoin. Of course, I think it's never too late to buy Bitcoin. I think the fundamentals are there. You're looking at institutions haven't even started. I say that probably less than 1% of funds around the world today have any kind of exposure to this asset class. And as Bitcoin starts going towards $1 trillion, a fund manager can't ignore $1 trillion asset class. In fact, you've got silver, which is 1.5 trillion. So how would they justify ignoring this fast-growing $1 trillion asset class? I also think that when you look at corporates, their treasuries, what Michael Saylor did, less than 0.00001% of corporate treasuries are now in this kind of asset. And so I think that the fundamentals have aligned. And again, I agree with you. I'm not a day trader for Bitcoin. Our next guest is a big trader, and he loves this segment. And we're definitely going to talk to Coach K about trading. But I think it's always a good time to buy Bitcoin. I say 60% Bitcoin, 30% Ethereum, 10% Polkadot. And I say just buy in on the same day of every month, on the 15th of every month or the 7th of every month. Just buy in, don't look at the price, and just keep increasing your position.
Yep, I agree with that. Dollar cost average. You don't need to go and take $10,000 and buy a bulk amount. Just take a little bit of money every month that you're willing to lose and buy crypto, and then forget about it. Come look at the price in 5 years.
Alrighty, so this is the part that I love, and this is the part where I'm going to put you on the spot and say to you, Fluffy, what are the coins or the sectors that you're watching? What's exciting you other than Bitcoin, Ethereum, and Monero? I know you're excited about Bitcoin. I know you're excited about Monero. Tell us what else you're looking at.
Sure. So I'm obviously aware of the previous segment where you spoke about things like Polkadot, and there certainly are a lot of like Ethereum replacement competitors out there. I'm kind of interested to see what Binance do with Binance Smart Chain, because it is a drop-in replacement for Ethereum. And I think as we start to see that upward fee pressure, we might see projects redeploying on Binance, on BSC, because they can do that very trivially. So that's one of interest. I'm certainly not suggesting people buy BNB or anything like that. I'm just curious to see how that plays out when Ethereum fees are 10x what they are now, and they're already crazy. And something else that I'm just more of a segment or a market that I'm interested in are NFTs. I think we're still very early in the NFT game, but I think over the next 24 to 48 months, I think that NFT space is going to mature. We're going to see real digital artists start to come in. Not that, I mean, of course, we have some gifted NFT artists at the moment. I don't mean to knock them, but you can imagine Banksy issuing an NFT. That would be insane. And I think we're going to start to see some of that.
I think the NFT play is huge. I think the NFT play around, digital NFTs, video games, and that is one segment of the market. And that's a huge, huge, huge market. And for me, my go-to man for that is Elio Trades. I mean, the guy knows that market backwards. But I think the bigger application for NFTs is actually the marriage of real-world art, real-world assets, and digital assets. And what I mean by that is that if you think about an artist or a piece of art, you can own an NFT, which is your ownership certificate, but it's also the story, the copyright to the story, which is also held inside that NFT. And then when the art passes from one person to another, that is also stored in the NFT. So you can kind of say, look, I've got this painting, which I bought. Here's the story of it. Here is where it was hung for 100 years. Here is where it was during the war. And when you take that to wine, and I know you love wine, so when you take the story of an expensive bottle of wine, and you say, for example, with an expensive bottle of wine, you say, when you drink the wine's gone. But if you create an NFT which shows you the story of the wine, shows you where it was stored, once you've drunk the wine, you've got this NFT. And, this goes on for concert tickets and sports tickets and whatever else. And I think that's the magic of NFTs. I think that's where we're going to get this beauty of NFT. I don't think it's what we're seeing now, although I do think this is a very good first phase. If you were going to get into NFTs, what tokens would you be buying?
Yeah, that's a good question. I don't know. I think that at this point in time, the NFT space is so underdeveloped that it's anyone's game. I think that we would be silly to think that all the major NFTs are going to end up on Ethereum. I think we're going to see some really cool stuff coming out in the next while as people start to get a little bit more serious on NFTs, and I'm very interested to see how that pans out.
Alrighty, Fluffy Pony, thank you so much for joining us. Thank you for coming on CryptoBanter.com. We're gonna definitely get you back here and get you catching up, because the chat's going crazy here. The guys are giving you big love from all corners of the world. You've obviously got a huge fan base following you.
Cool. Thanks so much for having me. This was fun.
Thank you, man. Alrighty. We are going to move on to the next segment, and of course, that is the segment where we bring you altcoin calls. Yep, that's the segment that you guys all love, the altcoin calls that we make every single day. And of course, who better to do that with than our good friend who hasn't called it wrong yet, and that is Coach K.
It'll happen for sure. I did say TVK was going to be my big one, and it's over 100% up since that call. So I'm feeling pretty good about that one.
You've said a lot of things, and in fact, I think all of your predictions have come right. My Zilliqa position has come right. My TVK position has come right. But it's a bull market, and every time I think that you're a genius or I'm a genius, I look at the screen and I see that everybody's a genius.
Everyone's a genius right now.
Yeah, crypto Twitter used to have about 1 million depressed people, and now it's got about 1 million geniuses. I've never seen anything like it.
The gurus have come. I mean, Elio said it really well the other day. He said, be careful of all the gurus that start popping up everywhere, because there's going to be guys who make those, they make a couple good trades and they think that they're the greatest things in sliced bread. But what really defines a trader is if you can trade in a bear market as well. It's not just about trading and, when everything's going up, you throw a dart at a board. But once we get a little bit of a bearish movement or we have a huge correction, well, let's see who's last and then and whose group or whose friends and stuff have made it. And I think that's what defines a trader a lot of the time. So, just be careful out there if you guys are starting to follow new people, then make sure that they actually know what they're talking about, because you can get wrecked pretty easily in this market. All
right, Coach, I want to ask you about a trading approach for this. So when I'm trading in this market, I'm balancing taking profits, which everyone's telling me, with saying, hold on, we're just entering a bull market, and any money that I've got that is not invested is not earning any income. So how do you balance the two? Do you actually have the guts to take profits now, or are you at a point now where you're saying, look, we've just entered, and by virtue of the fact that we've just entered this bull market, I'm going to be fully invested and start taking my profits later?
I mean, there's never a wrong time to take profit, but the problem with a lot of people is they take the whole entire thing at once. Smart traders, guys, and this is from institutional level, they take profit on the way up and then they buy when there's a huge dip. Otherwise, you have no cash to buy when Bitcoin dips, and it will dip. We saw it happen the other day. It looked like a small one, but it was a $6,000 dip. You could have got in $28,000 and right back to 34. So you could have made a really nice trade there, especially for Ethereum, the same thing. So I would say as it goes up, there's never a wrong time to take profit. Take 5%, 10%. Don't take all of it at once. And if it dips, buy more. That's what smart traders do. Having cash on hand is important. And I always have some USDT or some USDC or some type form of cash that I can buy an asset later if it drops. Because if you have all your money in the market and it drops, all your money drops. So just a good piece of advice for everyone out there.
All right. I mean, that's good. I have taken a lot of profits now, and I kind of always feel that, damn, I'm missing out when I take these profits. I'm missing out, like FOMO. But this time I'm going to be firm and I'm going to keep taking profits. I actually took some profits today on my Stellar positions. I publicized my Stellar position from the time that I bought in at about 13 cents. I took some profits today at about 35 cents, just simply because I think that, I've made 3x my money and I think it's time to take some profits.
Yeah. And here's the thing, if you did you close your whole position or you just took some profit?
I closed 25% of my position.
So what? So now you have all this money, and Stellar will come back down on those types of moves. They'll retrace and it will go higher. If it's going to go higher, it's going to retrace first, right? So even if it goes up like 10%, 20% more, when it finally retraces, if it retraces below your original entry, you have a new trade. Now you have 25%.
Coach, I don't want to interrupt you, but it looks like there is breaking news. I don't have any feed of the breaking news. What is it? There's a new agreement between EGLD and NASA. Is that real news? Wow. If it is real news, please, guys, call into the studio. You can go do that via our website. It's www.cryptobanter.com. Adrian, our producer, if you're out there and if this is news, please just hit the breaking news button and join us here in the studio. All righty, Coach. Let's talk about Bitcoin first. Is there any point in looking at a Bitcoin chart? I mean, we're in new territory. We've never seen this before. Is it even worthwhile calling up a chart?
I would say that it's harder to use TA when you don't have any resistance above, but at the same time, you can still look at channels, and you can find that right now what the chart is telling me is saying every time someone tries to sell the market, and I mean, you and I talked about this earlier, Monday was going to dip. Monday dipped. Funds came back from vacation. They were up $10,000, $15,000 of Bitcoin, and they were like, all right, we're going to take some profit, just like we just talked about. So they took profit. People came in, bought it back up. Yesterday, people took profit. They bought it back up. And now we're going higher. We just have a new all-time high today. And as you can see on my chart, I'm thinking we're going to $40,000 just based off of fib extensions. So, it's crazy because I was saying we're going to retrace, but that's why I told you guys in the videos before is keep your stop loss and just keep moving it up a little bit at a time. Because if it does keep going, you just keep going with it. When the trend is your friend, you stay in the trend. And right now, until we see an actual real correction, don't go against it.
So if you would have had a stop loss, which was say 15 to 20% under your position, you would have been closed out on the weekend. You would have been, your stop loss would have been hit and you would have been closed out. But then immediately after that, the price catapulted.
Yeah, that happens too. And I actually re-entered. So I entered another trade. So what happens is you're in your stops, right? So you look at levels and you're going, okay, I'm going to put my stop a little bit below here. You get wicked out. So while it wicks out, you look and you're watching the market and you're watching it go back up. and you're going, well, it's pretty strong. It's not breaking this level here. So I went and re-entered, and then we re-entered, and now we're all the way back up. So when you feel, this is something I talked about with my friend Ash from New Kids on the Blockchain. I was telling him, he was like, oh man, I saw it hit 28,000, 29,000. I was like, why didn't you just enter? He's like, oh, I didn't know what to do. I'm like, guys, if you use risk management, the worst you can lose is 1% or 2% if you're using that, right? So if you take a shot at it and it goes the right way, like this one has, you lose nothing. If you lose whatever you'd lose on a normal trade anyway. So he was like, yeah, you're right. I'm like, so if you missed entry by a couple $100 and you see it starting to get some velocity and going back up, well, the trend is your friend. Go in. Don't be scared. Don't be scared just because it's going up or down a couple $100. And if you're not trading it, like Fluffy said, there's never really a horrible time to buy Bitcoin if you're going to hold it for 5 years. If you're looking to get profit quickly, then there is a bad time to hold and buy crypto. So something I agree with him completely when he said that.
Coach, where do you keep your profits? Do you keep your profits in USDT? Do you keep your profits in Bitcoin and Ethereum? I started a new system a while back where I said all my profits are kept in a 60, 30, 10 BTC, ETH, Polkadot. And I'm trying to accumulate much more Polkadot because I kind of think that those three have now achieved the network effect and are almost, I'm not going to say impossible to fail, but certainly the probabilities of them failing is very, very low. Well, what's your approach for taking profits? Do you put the profits back into USD?
Well, it depends. I mean, you have to have USDT to buy Bitcoin. So you always need to have some. I always keep at least 10 to 15 to 20%, depending on where the market's at, in some USDT or USDC or DAI, whatever it is, a stable coin, so that I can buy more Bitcoin on a dip or buy more Ethereum. Because otherwise, then you have to use Bitcoin to buy Ethereum, or you have to use DOT to buy Ethereum. So you always have to sell something off. So if you're just looking at your portfolio and you have capital on the side and we're looking at 100%, then yes, I would, especially right now, when we're in a bull trend, I'd be putting in Bitcoin, I'd be putting in Ethereum, DOT, and some of your other smaller positions that you have a higher upside. And I'd also not just be holding my Bitcoin, I would be using projects like Celsius and Nexo, Aave, Compound, to be able to actually, if I'm not going to sell my Bitcoin, I might as well earn interest on my Bitcoin. So put some of it into a platform like Nexo or Aave or any platform that has loaning and borrowing, and then go and make some profit on it. I did a video yesterday about Yield App and how you can borrow on one platform at 6% on Nexo or on Celsius, and you can actually put it into Yield App and get 20% a year. This is what banks do a lot of the time. It's a pretty alpha strategy, but you can do it too.
All right. I mean, that's a great strategy. If you look at what other people have been doing, they've been borrowing Bitcoin from places like BlockFi or Celsius, depositing it into the Grayscale Trust, waiting for 6 months, and then selling it at the premium, and then rinsing and repeating. And for me, it's a huge arb, but it's a legal arb. So continue doing it until the arbitrage closes.
Exactly. I mean, it's an alpha thing. A lot of average people that come in the crypto industry, they have no idea how that works. But honestly, guys, if you don't know something, know what you don't know. That's the really, really, really big thing for a lot of people. I always try to get people to understand, if you don't know something, learn it.
Let's slow down a bit. Let's actually tell us about how you've made that free money arbitrage that you explained a second ago.
Okay, it's very simple. Okay, so platforms like Nexo, you can go and you can hold 10% in Nexo. So you have to buy some Nexo tokens or Celsius tokens, and then you have Bitcoin. So if you're holding your Bitcoin in a Trezor, what do you earn from it? Nothing. You only get, when Bitcoin goes up, it goes up. But if you hold your Bitcoin on Nexo and you don't do anything, you get 6%. So literally, if you just take your Bitcoin, put it on Nexo, you're getting 6%. If you put it on Celsius, you're getting 6%. So literally, you're earning Bitcoin on your Bitcoin by literally just holding it like you always were going to do anyways. So there are, I think, in terms of platforms, Celsius might be a better one, but because it doesn't have a website for a lot of people, it might be easier to use a Nexo. So just a couple perspectives there. Now, all you have to do once you've done that, you can find other opportunities. So Yield App gives 20% a year. So I took a loan against my Nexo at 5.9% APR, and Yield App gives me 20%. So that's a 14% ARB, and I don't have to do anything. I literally sit there, and it makes me 14% a year on my Bitcoin. My Bitcoin stays whole. I don't have to lose any Bitcoin or my Ethereum. So I literally gain on the Ethereum as it goes up, and then I gain an extra 14%. And I pay off the loan. So it's like amazing. It's the best thing ever. Free money. Yeah. Until that's impossible, you should be all doing this. I don't know why you would.
Come on, guys. If you do like free money, hit the like button, hit the subscribe button, give the coach love, give the coach love. Coach, the chat is going crazy. And before I start talking to the chat, and I'm going to get to all of you guys, Monty, Jason Brown, Wacho Yo-Yo, I see all of you guys. Before I get to you guys, I want to talk to Coach about the reason why we brought him here. And that is, of course, our altcoin picks for the day. Coach, let's talk about what altcoins you're looking at and why you're looking at those altcoins. Our users want to know, our viewers want to know what they should be buying. So let's get into it.
All right. Well, there's a lot of coins that I'm in. They're already moving, but there's a lot of significant upside. I'm looking at DIA right now. DIA's kind of like been stagnant for quite some time. It's an oracle. And what I do for this is I look at other oracles to get my idea. Like Link has started to move. Band has started to have a considerable move. So now it's like, okay, what else do we look at that's an oracle? Because they generally, as you guys saw in the summer, they go all together. So it was like, all right, which one's next? DIA is the next one I'm looking at. From a charting perspective, it's looking to break out of a certain level at about $1.54. Right here, you can see it. It's pretty much trying to break this level. And once it breaks this level, I mean, the only real resistance is about $1.80, and then it's really all the way up to $2. There is a 10% airdrop from the KuCoin hack that's coming, so it might dip again down, give you another entry. So just keep an eye on that. But I do like DIA for a move, quick little. If you're looking for a quick one, maybe to $2.20. But if you believe in DIA and what they're doing and their connections to Polkadot and all that stuff, you may want to look at that as an oracle because it's pretty much near the bottom as we're looking at it. And if we look at things like Band and Link, they're already starting to move. So keep your eyes on these ones as an opportunity for you to make some profit.
Okay, so DIA is one of them. What else are you looking at?
Theta T-Fuel. So I've told you guys this exact same trade on the show, or maybe not this exact one, but I've told you guys other crypto trades on the show. Now, this one might be a little higher risk because it's Theta T-Fuel, but Theta has been on a crazy run. So we watch a Theta and we go, okay, if Theta's moving, how much has T-Fuel moved on Bitcoin? Not so much. So it's come down and it's done a perfect retest of the Kumo. It broke out. It didn't retest, meaning what I mean by that is when we break a level, usually we retest it. So if we break out of the top of this cloud here, we have to come back and test that top of the cloud. We never did for many days. Then we came down here. We have this Tenkin is hooking up. We have Chico Spin's not super bullish, but it looks like all we would need for this to have a little bit of a pump. And we also have, since, right back on the 26th, it's been on a decline, and we have volume declining and price declining. It's actually quite bullish. So we could see that this would bounce from right where it's at right now. So if you're watching this right now, this is the trade. It's right here for you. It's sitting there. We have a bullish Kumo twist. And as I'm showing you here, this could be a potential 104% trade. If you're looking on the lower end, just to come down and tap this first resistance, the 6R trade. So you put $100, you make $600, just as an example. So it could be a really good trade to get into, especially as we see T-Fuel or Theta going crazy. And as we know, brothers and sisters like to move together, hence Bitcoin and Litecoin, etc.
All righty, next one. What else are we looking at, Coach? This is amazing. I mean, I must say, I'm a big T-Fuel fan. I'm a big Theta fan. So let's see. I think your trade is right. It's part of my long-term holdings. I'm not sure I'm ready to go just yet.
Well, I was looking at this one. It's not for me. I would be waiting for just a quick retest. It's already done it once, so we might be already out of there. And now you're probably looking like, okay, where does it go? The sky is the limit on BNB. BNB has been giving me free money pretty much for months. Every time they have pretty much anything come on their platform, now it's getting farmed and you're getting a bunch of free money. I mean, anyone that was in Reef that got the tokens and sold fast enough got free $100, $200 of tokens at least by just holding BNB. So holding BNB is really profitable for a lot of people, and you're getting all these farmed coins are coming to you. So how to look? I'll just teach you guys a little thing. We have a trend-based fib extension. Okay, so we're gonna just use it on a lower. Just really quickly here, I'm going to show you some potential for BNB where it can go next.
My problem with BNB token, I love the BNB token. I've been holding it for a long time, since about $10, $11. I've been holding BNB. My problem with BNB is in an altcoin run, I don't think that BNB can give you the 1x or 2x or 3x returns where the other alts can give it to you. I think BNB is a great stable bet. It's like holding DOT. It's like holding Ethereum. And I think it will continue to go up at the same rate that those guys continue to go up. But I can't see anything more than that.
Yeah, I mean, some people are going to want those safer plays. Some people are going to want to go on Uniswap and make, 10x's quickly. I make my 10x's mostly from private sales because they do that. And I mean, if we want to talk about something that's up in terms of private sale to now, we'd be looking at RSR breaking its all-time high, hitting 4.2 cents. So this one has considerable upside still. Even though it's got a huge market cap, this can at least go at 2x from where it is. So there's an opportunity there. If you look at DOT, we have the same thing here. So I do like that. We look at ADA, another one with huge potential.
RSR is probably the biggest mistake of my trading life. And I think you know why. I was a big holder of RSR, and I sold my position at about 2.5 cents. And I'm watching this thing go to 30 cents. It's 12x. And I was holding quite a big bag of them, as you well know. And so one of the biggest mistakes that I've made, one of the regrets that I've had, and it's a big learning for our viewers, is not holding on to the winners. Don't sell a winner. If it's a winner, don't sell it. And that's
if
one
it's
of the
going up. Just hold it. I mean, if you think that there's some negative news coming for it, then okay, I understand. But there's no reason to sell a winner. And look at this is a huge winner right now. We look at ADA. ADA's chart and XLM's chart are almost brother and sister right now. If you guys look at them, you'll see there's a nice wedge. It breaks out and goes boom, and it pops up. Where is ADA going next? As a lot of people have been asking me, this is why I'm pulling it up. ADA likely is going to turn into potentially a massive cup and handle. When I mean massive cup and handle, I mean massive cup and handle. So if it comes back down to this level, around 22 cents, and it turns into a handle, maybe even down to this level, which is in the green, I would be buying the house worth in that. Seriously, I'm not joking. If they came out and said, hey, everything's ready, our smart contracts are there, Celsius is saying that they're potentially going to use the ERC converter and go on to ADA, this is huge news. If it does touch this level and reject and come down, that would be a level where if you'd be silly not to jump into ADA and think that is going to absolutely explode. Just seriously, because they don't have the network effect yet, but it's going to come.
Yeah, they haven't got the network effect because they haven't got the smart contracts, because the developers can't build without smart contracts. And therefore, they don't actually have much development going on. Do you agree with my thesis, as I mentioned earlier, that ADA may be one of the front runners for the interbank clearing system?
Yeah. ADA and XLM, it's the Hyperledger, right? They definitely could be.
XLM, the big difference between ADA and XLM is that ADA is purpose-built for smart contracts, where XLM is purpose-built for fast clearance. Now, the banks are going to have to make a call as to whether they want fast clearance or whether they want fast clearance and a derivatives platform built on the same blockchain, or whether they're going to start using cross-chain protocols. And as far as I know, there are very few cross-chain protocols that interoperate with Stellar Lumens. And that for me is why I think XLM is not the front runner for, it could be a front runner for payments, but not a front runner for derivatives. In fact,
have you heard of the other one? Have you heard of the other one that people are rumoring right now?
DOT?
No, it's Celo. CELO. Yes, it just listed on Binance. It's been rumored. I've been listening to very, very, very good fundamental guys that I know in the space came to me and said it might be Celo, and I was like, Celo, like no one even knows about it. He said no, it very likely could be it.
Let's get the Celo chart up. Let's see what Celo's done on the back of those rumors.
All right, so this is like more of the. It's not been out on Binance very long, so there's not much chart history.
Wow. Okay, there's nothing to look at.
But let me see if I can find a better chart. I don't know if on OKCoin it was there a little bit longer, but I mean, that was probably the Binance side of things here that came out. But I don't know the fundamental side as well as my friends who've been telling me, but they said Celo, and they said this 3 months ago. They said, if something happens with US banks, it was that Celo is going to be the one. And I was like, really? Like, why? And they were like, they were saying that they have the really good connections. And I'll get you this information, Ran, so that I have it on the next show that we do together.
We'll get you back on the next show. We've got time for one more call. I think make it your best call, because this is the one that you're going to be remembered for. So what are we remembering you for, Coach K? What are we remembering you for until you come back here later on this week?
Yeah, well, let's look at this. Kava, it's about to break out. We got in way down here for my crew. We were down in there. We saw that it was starting to go. I think Kava will probably break out and come back to, at least 250, 280 again. You'll see it in this. I'll just draw a little level here. I think we're going to see it come back to 2 months.
Don't know, what does Kava actually do? I know that they're a cross-chain protocol. I know they provide cross-chain functionality. What else do they do?
They're DeFi. Basically, they're just a DeFi protocol. They were buying. I think they're connected to Binance directly. So that's where the USP comes from, because they're Binance's like baby, basically. With this chart, I don't really care. Like, here's the thing about traders. Sometimes I know a lot about the project. Sometimes I don't. When I'm trading a lot of the time, and this is why I don't get emotionally attached to these calls, I just look at them and I go, okay, the chart is telling me it's going to do this. And then I just go with it and I don't really care. Because the more that you, this is something for a lot of you guys to understand. The more that you like a project, the less you're going to be objective to looking at it and going, yeah, this is what it's actually showing me. Because if you really deeply know a project and you love it, like I love RSR. Sometimes I get subjective about it. I'm like, I know it's going to go higher. So, I sometimes make a bad call when I'm trading it. But when I'm trading Kava, whatever.
Look at the charts or look at the emotions, but don't look at both. Coach K, we're all out of time. We're trying to keep these shows down to an hour. So thank you very much. We'll chat with you later in the week. We've got a big segment on the NASDAQ on Thursday. So we'll probably get you back on our show on Friday. Thank you very much for coming on Banter.
Cheers. Thanks for having me again.
All righty. That brings us to the end of the show today. I hope you guys have had fun. I've certainly had a lot of fun. I'm going to go and fill up my bags. I've got a whole lot of ideas. And I'm going to share those ideas with you on my Twitter and on my Telegram group. So if you don't follow me on Twitter and don't follow me on Telegram, now is a good time to start. I'll see you again at the same time, same place tomorrow. I'll be here. My name is Crypto Man Run. You've been watching CryptoBanter.com. And if you have enjoyed the show, give us some love. Today's been a great day, so give us some love. We've given you the biggest winners of the day. I'll see you again, same time tomorrow. See you tomorrow.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.